Hey traders, Nick here, doing some homework after hours. I feel it is necessary to do that today because today was Fed day and the market closed on a sour note. You're looking at the S&P. This is the SPX right here and the VIX right here, the fear gauge as they call it, and the small caps right here. So let's start with the bad news first. The day was horrific, not because of how the scoreboard, -1% is not a big deal. How it happened. This was the Fed event here, and they fell off a cliff late in the day, and they closed at the very low of the day. That's the disappointing part. All day we were doing fine, and then late in the day, boom. And the VIX spiked higher than yesterday, late in the day. That's the disappointing part. The IWM were up most of the day, outperforming everything, but they too said, you know what, screw it, we're going to go down too. Now, I want to point out a few things. That the TLT closed green. Why is this important? It closed off the highs of the day, but it still closed green. That means rates didn't spike. That means this dip is not Powell. If Powell scared the market, rates would fly off the chart because he's raised his rates, right? But they didn't. The TLT is the opposite of rates, and they were green. The TLT was green. So it's not about Powell. I promise you that this price action would have unfolded not about Powell. If you were talking to me in the last couple of days, I mentioned 437.2 quite a few times. Why? A few days ago, there was a flash crash out of the blue. Like out of the blue, the SPY was way above where it was. Whoosh, one large dip down to 437.12 that barely lasted a few seconds. So I've been asking, are we going to chase it down? It happened to 444 from 449 as well. Also, just before that, there was a bunch of wild ticks in the bond market. So my contention is that something happened in the last week that caused a big tizzy in the bond market, and somebody flashed forward the SPY lower, and they did it 2 weeks ago with the 444. Long story short, I think this is Wall Street shenanigans, and let's see what happens once we hit SPY 437.2. We're almost there, 437.9 right now as we're speaking. This is the after hour session. I plan on buying the dip like I said I would. I didn't do it because the dip really happened late in the day. There was no dip until the last few minutes. And if you know me, I'm super busy during the day working with investors, traders, going point A to point B. We did well in spite of this today. And so tomorrow, if we get to 437.2, I will go long by selling a put spread and seeing if we hold it. And I could also go long by buying a call or a call spread a few days out. That all depends on what kind of a trader I am. That all depends as to my portfolio. Do I have a lot of losing bullish trades? I shouldn't add anything. I'm already long. So it depends. I will try to post what I do on this dip. Let's zoom out, and put things into perspective. If I showed you this chart, would you say this is a bearish chart? I would say no. This was the October low, ascending channel. You can draw a parallel channel showing that they're buying dips. Every dip has been bought. This is a dip, they will buy it. Now, this is the SPY. If they buy it before losing 435, remember these numbers, and 433 and 431. Remember those numbers, 435, 433, 431. Those are big numbers that could hold. If we lose 433, the middle of those two, we could risk drifting towards 420-ish, plus or minus $2. And that would be okay from a chart perspective, and this chart would still remain bullish because it would be right here. And look at the weak point we left when NVIDIA reported earnings and we blew up a couple of earnings ago. So 6 months ago, explosion within the last 6 months. And we never looked back. We never came back to test this for footing. If this dip had been just a little bit bigger, then we would not need to do this. But now we kind of do. So I'm not bearish. I'm cautious. We do have support, solid. We have a trigger up right here and right here. So if we rally above 450 and 454, we would end up in the 60s. So that battle is still there. Look at it. is just as close to the breakdown levels as it is to the breakout levels. So by no means this is game over. I'm just laying out the perspective on a higher time frame. It's easy to get wrapped up in the emotion. And let me tell you the numbers on the SPX in case you're an SPX person. 4336 and 43, let's go to 4330, round number. 4330 on the SPX. If you lose that, you may end up in the low 4200s, and that's the same number that would eliminate that weak point. Okay, head and shoulders, you can totally see it. If it triggers, we end up here and it'll be fine. Inverse head and shoulders or inverse cup and whatever, there's a trigger right there. The opposite of this one is right here. We're just as close to both. So we don't know what's going to happen. It's not about Powell today. The jerk spoke today and he just pissed off everybody, but that's not a fear of Powell. If it were, the TLT would be super red. It wouldn't be green. It's off the highs. The TLT did, left money on the table. It was much higher, but it closed green nonetheless. So this is not about Powell. I don't like the guy, but I won't blame him for today's dip. It's about expectations. We had already expected that they would not rate hike, and they delivered that and nothing but that. And his words were so stupid, I can't even tell them. Let's just forget about him. All right, over and out.